Giovanni. We've got Fox Business's Charlie Gasparino and the independent women forum, Hadley Heath Manning. Hadley, that seemed like almost a universal condemnation of what foreigners might be doing, namely the Chinese, when it comes to some of these other areas, but also concerned about going too far. Advice the president reportedly ignored. What do you think of that?
I believe in free trade. It's good for prosperity for people across the world. On the other hand, we recognize that our national government has certain tools at their disposal to ensure that American workers and American consumers are treated fairly in a global economy, and that's what we have today, like it or not. And so the bottom line for our economy is that, yes, I do think that the stock market will recover from some of the volatility. The stock market, as I've said before, is not everything in our economy. We're continuing to post good jobs numbers and good wage growth, and consumer confidence is high. So as long as those basic economic indicators remain strong and people are celebrating and enjoying more of their hard-earned money in the form of tax cuts, then I believe the economy is ultimately going to weather this and be in good shape.
Do you worry, Joe, about it? Something, an unexpected development like a growing trade war or whatever that offsets whatever good we've been seeing out of the tax?
Yeah, I mean, that could be a hiccup. I mean, when the tax cuts were first announced, the market took off on a lot of optimism. And then a lot of people want to know what caused a correction a couple of weeks ago. I think it was more of too much optimism combined with that volatility trade that needed to be unwound, because a lot of funds are short volatility. And when volatility spiked, they had to cover that.
Well, what triggered the volatility was good news, essentially.
True.
Right?
So, but I think a lot of people have to look back at last year that without a 3% correction, that's actually the anomaly. That's actually not normal, where we normally have about a 10 to 15% intra-year correction. So this volatility that came in is actually going to be more the norm going forward.
I'm just worried, Charlie, that the president himself is the guy who's going to undo his own great news.
Yeah, there's two sort of interesting scenarios here. One is the fact that you have Republicans, and I always tell this when I have arguments with people on this network about, blaming the Rust Belt on NAFTA and free trade. These are Republicans from states that have manufacturing in them. Roy Blunt from Missouri, Bob Portman, I think, was there as well, a few others, who are saying that, Mr. President, if you get protectionists to protect the U.S. industries that you're trying to protect, it's going to hurt them more than help them. And just remember that they have a vested interest in keeping these industries there, yet they're telling the president, don't go the protectionist route. That's one thing. The other thing is this. I disagree with the notion that the stock market doesn't mean much, because it does. It signals fears in the market, and there's certain fears that are in this market. Number one is that the tax cuts don't pay for themselves and deficits balloon, and we get much higher interest rates. You saw that in the market shakeup. Yes, exacerbated by the volatility trade, but the volatility trade was there already. And this is what essentially, I think, sparked it. The other thing is, one of the other existential threats to the market is if the tax cuts don't work and if we have a trade war. It's never good for our economy. It's just not.
Now, Hadley, one of his arguments for doing and his saying and threatening what he's been saying and threatening is that you don't have to do it to get what you want. But of course, in history, we've learned that things can get out of control, right?
That's right. And when the president talks, that's worth a lot. I mean, you say the pen is mightier than the sword. The Twitter and the words of the president weigh heavily on the minds of foreign leaders. And even at home, they certainly influence our markets, and especially the stock market. I want to underscore something Charlie said, and that is deficits. I believe that President Trump actually is at greater risk of undoing his legacy by continuing to let government spending run rampant, run out of control. That is a long-term threat to our prosperity, every bit as much as a trade war, maybe more so. And I think that when deficits run high, that is an enemy to prosperity. So we have to address government spending.
But why is that?
If Republicans, why is it? We've seen it.
It's because of much higher interest rates, more than just the 10-year spiking. And I think that's what the market was saying. I mean, listen, we had a budget deal. You pointed this out when the markets were going crazy. They reached a budget deal that added another $300 billion to the deficit. Right. I mean, it was just a worry on top of a worry. As if it was a rounding error. On top of a worry. And I'm telling you, if GDP doesn't spike above 3% soon, people are going to start worrying in much higher deficits and interest rates.
But to Charlie's point with the interest rates, a 10-year getting above 3 would definitely rattle, especially the velocity.
That seemes to be just a matter of days, though.
Yeah, I mean, I know David Tepper says wake me up when it gets to 4, but I think the market's still at 3.
So you think we get over 3, we have a big hit that
It
day?
becomes a little bit of competition, yeah. I mean, you can still have the market rise with rising interest rates, but I think a lot of the markets...
But even 3% backed by the full faith and credit of Uncle Sam is still paltry.
Yeah. I mean, I think the market is a discounting mechanism where they're expecting these tax cuts to add $10 to $15 to S&P earnings. To Charlie's point, if that doesn't come through...
Is the S&P, is the market rich even at these sort of half comeback levels?
It's fairly valued at this level. It's fairly valued. I mean, if you put... Depends on what estimates you use, on 140, 145.
All right, guys, thank you very, very much.